G'day there. Welcome to the closing bell on the 14th of April for me, recording at 11 a.m. And we have seen a bit of strength, haven't we? It's been a difficult market to follow, hasn't it? This is the E-mini S&P 500 futures, and really the crux of the matter for us in the markets, watching this pretty closely. And if you have been watching these videos, you know that we've been keeping an eye on this downtrend and wondering whether it was ready to have a bit of a spike to the upside, sort of breaking out above a couple of key resistance levels. And it's not quite there yet, but it is constructive, isn't it? That it looks like it wants to rally. Could end up being a huge dummy for down the track in a couple of months. So this sort of price action is something I wouldn't be surprised to see, a big spike in prices in this S&P from the current level of around 4150. A breakout above those levels would cause lots of buying to come in, and I'd expect it to head up into that 4500 to 4650 area. But I'd be wary of the growth faltering, entering May, the sort of sell in May, go away type of thinking, and what happens with commercial property, etc., etc. So there's still lots of negativity around, but I think it's just a bit of a balancing up process happening with people thinking rates are about to reach their peak, and people adjusting portfolios, and a lot of people have been forced sellers throughout here because of the bond market volatility, bonds settling down, possibly people able to increase exposure. And when the market rallies and not many people are on it, that can feed the rally as well. So it could just gravitate higher without much happening over the next month or two, apart from this sort of stabilization in rates and people thinking we're getting closer to a sort of peak in rates. But just looking purely at the technicals, and this is what I was talking about last week, was you'll remember I was bearish during this period and was sort of saying, look, if it does, bust these levels, wow, you're looking at a really bad situation for the market, because the downtrend that we've had for the last few years was all still intact, and it was sort of looking at this as a continuation of these waves, going down up into the sell zone, next wave down, back up into the sell zone, next wave down, back up into the sell zone, and then next wave down. So that was all very classic, and that's what I was looking at, and was expecting prices to, revisit the longer term moving averages, which they did. Then we had the bank crisis. The Fed stepped in, changed the rules, backed up everyone's collateral, and off we went, things turning around. So just purely technically, from that point of view, I have to respect the fact that the weekly trend has turned up, that these waves to the upside are intact and still heading higher. I've said this last week. So the point being there that, the breakout above that high is looking for that next wave higher. And, in the bigger picture, up around 4350 is pretty huge, being the most recent, I guess, highest wave within that longer term downtrend. So that being the most recent sort of high. So above there is bringing the whole downtrend into question. So you can see quite a chain reaction through here, which could see quite strong buying. But, whether it turns into that bull trap remains to be seen. And I guess that would be my favorite, that there is still problems around. But, I don't really know, do I? Things could be off to the races again from here. It really could. if the long-term trend turns up. I've got no excuses at all. So it is a really difficult time to be making big predictions because prices are, bang in the center of the whole correction. And you can see there's been just lots of work done. We've got about a year of going nowhere. But just short term, I am leaning bullish, and I have been for the last few weeks since we got that weekly buy pivot. And I said, look, any selling should meet buying pressure. We are seeing that. So the question remains, can it have that next wave higher? And yeah, how far does it go? But I bought some gold stocks. I've added to some other positions, and willing to let this go. We've got some stocks on board, and I'm happy for the market to rally. I think it's probably a hated rally because not many people are on it. The exposure in the market's been lowered a lot over the last year, and that may feed the FOMO, fear of missing out. So that is a potential outcome from here, but just remain aware that it is still in long-term downtrend. So I'm, looking at the exits, I guess, willing for this to break these levels and have a bit of a run. But I'd want to be taking part profit on positions up in that sell zone area, because it is not even just having risk to come back to that point of control before carrying on, but it could also be the starting gun for a big wave lower. So that's how I see things. I pointed it out last week, and it is all still playing out, where I've sort of switched from that bearishness through this phase, and now I'm short-term bullish. And yeah, I guess interested to see whether the market will actually try to bust out above these levels, and that'll be a big short squeeze. There's lots of people, probably short through here, and this would be that final take out of those positions, get everyone bullish, and that would be a perfect moment for it to then tip over and completely fool everyone, which is what the market loves to do. And gold was the main thing I've been focused on lately, trying to get you guys buying a few of these beaten up smaller cap gold stocks. And well, hopefully you remember also that I gave you Newcrest Mining back down in this area. So hopefully a few of you jumped on that. We certainly did in one of my services, bought it up for under 20 bucks. It's now up at 30 bucks now in a matter of months. So, multi-billion-dollar company, up 50% in just a matter of months. So that's been sort of a great run, and it can continue. So I'm very interested to see how gold trades through this next period, because, Bitcoin is taking off. We're looking at that, peak in rates potentially, but still there's lots of problems around. I'm worried about the, commercial real estate. There's a few more shoes to drop. So the conditions are right for a potential break and run, but you're always wary at these highs. I'm always looking at the sell zones, as I've told you about, the areas where I often see reversals in prices before taking out the high. But then you also have to be wary once it breaks out, because you'll get a spike of people buying through the all-time high. So you get people sort of buying the breakout, and often those people get shaken out. So even if it is heading a lot higher, I'd expect to see an initial false break. So a spike through, and then probably some selling for a few months to scare everyone. And then a break of that high is when I'd be saying, wow, watch out, this thing could really run. But all pretty constructive at the moment. And I hope that has been working out for you if you've been watching the videos. I think it's just a matter of seeing how far this rally now can go in stocks. I'm prepared for it, happy for it to keep going, and we'll buy a few things. But keep an eye on the exits. It would be my main focus to say to you today is short-term traders, sure thing, go for it. But just be aware that the long-term downtrend is still in place. And any bad news on the commercial real estate front, I'm just wary that we could see another leg down in banks and that sort of thing at some point. All right, well, that's enough for this week. I've been on this theme of the showing you the stocks and gold and just running it through with you. And I think it's all really panning out, isn't it? So I'll come back with more next week. Cheers.